Section 177 Audit Committee. Section 177 of the Companies Act 2013 provides for constitution of Audit Committee. According to this section, formation of Audit Committee. Audit Committee shall be constituted by the board of every listed company such other class or classes of companies as prescribed under Rule 6 Companies Rules 2014. All public companies with paid up capital of 100 crores or more. All paid up public companies having turnover of 100 crores rupees or more. So paid up capital 10, turnover 100. All public companies having in aggregate outstanding loans or borrowings or debentures or deposits exceeding 50 crores or more. Explanation. The paid up share capital or turnover or outstanding loans or borrowings or debentures or deposits, as the case may be, existing on the last date of audited financial statements shall be taken into account for the purpose of this rule. So it is applicable to, first of all the listed company, second class or classes of company as per rules, all public companies having paid up capital of 10 crores or more, turnover 100 crores or more, outstanding loans, borrowings debentures, deposits exceeding 50 crores or more. Debentures, deposit exceeding 50 crore. So that is the formation of audit committee. Composition. According to subsection 2 of the section 177, the audit committee shall consist of minimum 3 directors with independent directors forming a majority. So 3 minimum directors with independent director forming majority, provided that the majority of members of audit committee includes its chairperson shall be person with ability to read and understand the financial statements. So amendment happened with the listed public company. Every listed public company, now it is as every listed public company has to be added, not just a listed company, a listed public company. That is one amendment. One more thing is this minimum director should be composition 3 directors with independent directors forming majority. So shall constitute audit committee which shall consist of a minimum of 3 directors with independent directors forming majority. In the majority of audit members committee includes its chairperson shall be person with ability to read and understand the financial statement. That is, it should be financial literacy. For Section 8, company in the audit committee need not have majority independent directors. So next, disclosure of composition audit. The board's report under subsection 3 of the section 134 shall disclose the composition of an audit committee, and where the board had not accepted any recommendation of the audit committee, the same shall be disclosed in such report along with the reason thereof. Minimum three directors plus independent directors forming majority. The chairperson should read and understand the financial statement. Independent directors forming majority is omitted in the constitution of the audit committee for the purpose of companies covered under section 8. Okay. Responsibility of an audit committee. According to subsection 4 of section 177, every audit committee shall act in accordance with the terms of reference specified in writing by the board, which include the remuneration for appointment, remuneration and terms of appointment of auditors of the company. It is the responsibility of the audit committee. Review and monitor the auditor's independence and performance and effectiveness of the audit process. Examination of the financial statement and the auditor's report thereon. Approval or any subsequent modification of the transaction of the company with related to parties, provided that the audit committee may make omnibus approval for related party transaction proposed to be entered into by the company, subject to such condition as prescribed under Rule 6A inserted by Companies Second Amendment Rules 2015. Scrutiny of intercorporate loans and investments. Valuation of undertakings or assets of the company wherever it is necessary. Evaluation of internal financial controls and risk management systems. Monitoring the end use of funds raised through public offers and related matters. These are the responsibility of an auditor. Recommendation of or appointment, remuneration, appointment of auditors of the company. Review and monitors the auditor's independence and performance. Examination of the financial statements and auditor's report. Approval of any subsequent modification of the transaction of the company with related to related parties. Scrutiny of intercorporate loans and investments. Valuation of undertakings or assets of the company. Evaluation of financial control. Monitoring the end use of the funds raised through public offers and related matters. Approval or any subsequent modification of transaction of the company with related parties. There is a one amendment with regard to that. Subsection 4, in clause 4, after the proviso, the following proviso shall be inserted, namely, provided further that in the case of transaction other than transaction referred to in section 188, and where the audit committee does not approve the transaction, it shall make its recommendation to the board. When the audit committee does not approve the transaction, it shall recommend recommendation to the board. Provided also that in case any transaction involving any amount not exceeding 1 crore rupees is entered into by director or officer of the company without obtaining the approval of the audit committee. Not exceeding 1 crore rupees entered into by a director or officer of the company without obtaining approval of the audit committee, and it is not ratified by the audit committee within 3 months so related party section 188, not exceeding 1 crore rupees without approval of audit committee. And it is not ratified by the audit committee within 3 months from the date of transaction, and it is not ratified by the audit committee within 3 months from the date of transaction. Such transaction shall be voidable at the option of the audit committee, and if the transaction is with the related party to any director or authorized by any other director, the director concerned shall indemnify the company against any loss incurred by it, provided also that the provision of this clause shall not apply to the transaction other than the transaction referred to in section 188 between a holding company and its wholly owned subsidiary company. So it is voidable transaction, voidable by the audit committee. Directors should indemnify in case of loss. This is the amendment. So next we will go to rights of audit committee. The audit committee may call for the comments of the auditors about the internal control systems, the scope of audit, including the observation of the auditors and review of financial statement before their submission to the board, and may also discuss any related issues with the internal and statutory auditors and the management of the company. So may call for the comments from the auditor. Next one, the audit committee shall have authority to investigate into any matter in relation to the item specified in subsection 4 or referred it to by the board, or and for this purpose shall have power to obtain professional advice from external sources and have full access to information contained in the records of the company, section 177 subsection 6. Have authority to investigate any matter as specified in 177(4). Rights of the auditor. 177(5) investigation by the audit committee. 177(5) call for the comments of the auditors about the internal control system, scope of audit, including the observation of the auditors, review of financial statements before their submission to the board, discuss any related issues with the internal and statutory auditors. So this will be 3. Second will be discussion any related matters with the internal auditor and the statutory auditor. The auditors of the company and the key manager personnel shall have the right to be heard in the meetings of the audit committee when it considers the auditor's report, but shall not have the right to vote. The auditors of the company and the key managerial personnel shall have the right to be heard in the meetings of the audit committee when it considers the auditor's report, but shall not have the right to vote. Auditors and key manager person, they can hear the meeting but cannot vote. Next comes vigil mechanism. Formation of vigil mechanism. According to section 177 subsection 9, vigil mechanism shall be formed by every listed company and such other prescribed class of company. Rule 7. Companies accept the deposit from public. Companies which have borrowed money from banks, public financial institutions exceeding 50 crores rupees. So vigil mechanism, section 177 subsection 9, for the listed companies and the class or classes of companies, those who accept the deposits and the borrowings is 50 crores or above. Which companies have borrowed money from banks and financial institutions in excess of rupees 50 crores rupees. Excess of 50 crore. Objective of the formation of a vigil mechanism. A vigil mechanism shall be formed for the directors and employees to report genuine concern in such a manner as prescribed in Rule 7 of the Companies Rule 2014. So, why it is formed? It is to report genuine concerns. The vigil mechanism shall provide for adequate safeguards against the victimization of persons who use such mechanism and make provision for direct access to the chairperson of the audit committee in appropriate or exceptional cases. It is imperative for the company to disclose the details of establishment of vigil mechanism on the website of the company and its board meeting. Rule 7. Persons who use such mechanism means employees and directors who avail the vigil mechanism. Who can use? Employees, directors. The companies which are required to constitute an audit company shall oversee the vigil mechanism through the audit committee, and if any of the members of the audit committee have a conflict of interest in a given case, they should rescue themselves and to others on the committee would be deal with the matter on hand. In case of other companies, the board of directors shall nominate a director to play the role of audit committee for the purpose of vigil mechanism, to whom other directors and employees may report their concern. The employees and directors who avail vigil mechanism may have direct access to the chairperson of the audit committee or the director nominated to play the role of audit committee, as the case may be in exceptional cases. In case of repeated frivolous complaints being filed by director or employee, the audit committee or the director nominated to play the role of audit committee may take suitable action against the concerned director or employee, including reprimand. Penalty. Section 178, Subsection 8. Company punishable with fine shall be varying from 1 lakh to 5 lakh rupees. Every officer punishable with imprisonment for a term extending to 1 year or with a fine varying from 25,000 to 1 lakh with both. So company 1 to 5, person 25,000 to 1 lakh, punishment not extending 1 year or with both. In case of listed company, formation, composition, responsibility and rights of audit committee shall be governed by SEBI LODR regulation issued under SEBI Act 1992. One of the main point is duties of the audit committee. The recommendation for appointment, remuneration and terms of appointment of auditors of the company. For the government company, the word appointment will not come. Rest all the same, because audit committee will take care of that. The amendment about the related parties not exceeding 1 crore rupees entered into by a director or officer of the company without obtaining the approval of the audit committee, that has to be kept in mind. So this is with regard to the audit committee. Section 177, listed company, class or class of company, paid up capital 10 crore or more, turnover 100 crores or more, outstanding loans, borrowings, debenture deposit exceeding 50 crores, composition minimum 3 director, forming independent forming majority chairperson, financial literacy. In case of related party, not exceeding 1 crore without approval of audit committee, and it is not ratified by the audit